Hello. So at the end of that video there, that little segment, I was talking about trading during the day, and it's a process. So basically, what I was trying to get across is that when the market opens at 2:30, whatever time you've got to trade between 2:30 and 9 p.m. doesn't matter what time of the day, but you've got to understand that different times of the day are kind of have a different feel. You know, you tend, if the markets were kind of normal, to short more towards the end of the day, and you tend to go long more at the start of the day. But when the markets are going terribly down, you know, and the markets at the moment are absolutely crazy. But what I'm saying is that the work part of it, which is, it takes work. Obviously, it's going to be obvious to you that it's going to take work, because, you know, I want to give you that stringed guitar. That's my gift. That was a good analogy, actually. I was quite happy with that analogy. But I'm feeling a bit more chilled out today. A little less serious. I was on a serious one when I was doing those videos, but, you know, this is... I guess I've had a lot more sleep, so I can probably do a better, video about charting, which is, finding the points and trading actively during the day. So what I'm saying is that all day I'm basically just going like this. That's what I'm doing. Just going like that and just looking at them. And these are 5-minute charts, okay? So at the start of the day, you can see that if I had this up at the start of the day before 10 a.m, I wouldn't be able to see any patterns forming. So here, obviously, I can see the patterns have already formed during the day. But if it was before, 10 a.m. or 11 a.m, I'd just see a few little candles. I wouldn't be able to distinguish. Wouldn't even be able to see a little pattern developing here. Which obviously, if it's at 12 p.m, for example, USA, obviously I could see that the pattern is already developing. You know, F there, forward. You know, I could see that the pattern's already developing if I saw it at 1 o'clock or 2 o'clock. Whatever. So at the start of the day, I'm looking at 15-minute charts. So then I get a summary of the 15-minute chart, and this is just as powerful, because with the 5-minute charts, you're looking at those patterns developing. You're dipping in and out all day. You've got a lot of time, and especially, if you actually sit there and if you come to a point where you don't act compulsively, you don't act in a gambly way at all. You're 100% rational in your approach to it. I.e., you keep looking until you find an opportunity. When you find an opportunity, before you've even taken it, you know whether you're happy with it or not. So basically, the outcome doesn't matter. As long as if you're happy before you take the trade, then if you lose it, it doesn't matter, because you were still glad that you took. You would have taken it any other time. But obviously, you do want to get the highest win rate you can. I think I had about. I'll show those results. I had about maybe a 58% win rate, which is really bad, it's really bad. I want a 70 or 80% success rate, to be honest with you. And I know that if I properly pull my finger out, I can do it. You see Ford there at 560, that's a good place to short, You see it bounced, it goes up against 560 halfway through the day. If you look at the pattern, the way it's going, look, April the 5th, 6th, look, 7th, 8th, look at the way it's moving. And when it's up there around 580 and it gaps up that much, look what it does. It follows that trend line down. It comes down to 520. And so this is you can see everything very clearly. You can see the levels. Look at $5, April the 7th. It hits $5. Look at the day before. It wouldn't really break above 460 there, but let's. Look at this, MRO. Look at the end of the day, 380. You could have taken that at 380 100%. That's a really good example there, because look at the action during the day. Like, basically, if I'm looking at a stock at April the 9th, okay, let's say, for example, I see it. So I'm going to go 5-minute chart, okay? And I'm going to say if I see MRO. So if I'm looking through a 5-minute chart, okay, what would I see? It's something that I might look into, because I've seen an extension down. Okay, so MRO, there it is. For some reason, it's only got those 3 stocks up there. I don't know why that's happened. I think I was waiting to load them. But anyway, that's what I would see, isn't it? So if it was during the day, you can see that quite a lot of the stocks did that. They had a little dip, so that means they're all looking like that. So that means the main markets were dictating that a lot. If I looked at the SPY now, I guarantee if I looked at the 5-minute, it would look something like that. So you can see that these stocks tend to be, following the same kind of pattern there. So, you know, if you would have been watching the SPY as well, and at 130 there, you would have seen it drop down. This is why it's hard to trade when it's this volatile, because the main markets are dictating the movements of all these stocks in more of a severe way. So say, for example, it's a tide, you know. It's a tide, and you're on a boat, you know, and you've got the tide going against you, okay? And the tide is never gets past a certain strength, so you can always kind of swim up and downstream if you need to. But when the markets are like this, you've got a storm and you've got wind going in the same direction as the tide, and not only that, but the tide, the main tide, i.e. the SPY, is so volatile, because what I'm trying to get to is that with the individual stocks, you trade them off levels. You know, you look at the way they're moving individually, and then you tie in the SPY, the main markets, into your decision that you're taking on the individual stock. But if you're trading the SPY, you're basically trading blind. So if you're actually trading the stock, the SPY, you're effectively, you know, you've got nothing to work on. There's no main market. So obviously, when all the stocks are kind of doing the same thing as the main markets, then also you've got nothing to go on. So what I'm saying is that drop between 1 p.m. and 3 p.m. there would have happened with the main markets, and you'd have basically, if you'd picked it up at 380 there, you'd want to see a reversal point on the SPY. It'd want to be on a support level on the SPY. So let's have a look at the SPY at 3 p.m. on this day. And if we can see a solid level of reversal at 3 p.m. on the SPY, then you probably would have had the perfect setup for any of those kind of stocks that made a drop and a reversal. So let's have a look at this. This is why you have the SPY open all the time, the main markets, and you can keep constantly looking at them, because, you know, if they're this, sometimes you don't need to. If the markets are not amazingly volatile, I mean, look between the months of October to, you know, middle of February there, look, they were just, nothing was going on with the main market. So you were trading the individual stocks, but in general the markets were going up, so you didn't need to take the main markets into account so much. But at the moment, it's very serious. I mean, it's bad, really bad. But anyway, you know, I don't like it when it's, I find it very difficult to trade when it's this volatile, for the exact reason I've just told you. And look, 3 p.m, there's a dip in the market. So there you go. There's a dip in the market at 3 p.m. 276. I mean, it's, again, look, it's weird, because between 11, what would give you some inkling in that direction that it might have reversed? But you know, 276, it would have been hard to take it off there, because it's such an arbitrary area. It doesn't look like a strong support point that it's bounced off 276. You know. Well, actually, you know, if it hit 275, I mean, if you look at 276, so if you look at that candle, you're always looking for candles for levels. You see the last candle there on that day? Look, wait, there, look. You see the top of that candle on the previous day? You're always looking for candles, but 275 is much more of a stronger level. One, because it's a round number. Look, 265, 270, 275, 280, 285, you know. The more round it is, the more significant it tends to be, but it's not always, because sometimes, you know, this is why you have to keep looking at the markets every day. Keep at it, keep looking at stocks, you know, looking at stocks, but don't I've never overanalyzed. Luckily, I've never had the problem of overanalyzing. I mean, I have actually. I mean, when I was really starting out, but I didn't have the benefit of this video series, you know. But anyway, look, 275 is a strong level. 276, it does hit that last candle on April 8th there. You know, it's exactly the same level, but you know it. Well, you can see the reason why it actually didn't get down to that level of 275 was because it was too strong there. So it made that dip. But what I was going to say before as well, if you look at the strength of the earlier part of the day, so you're taking it day by day, you're looking at this day, look, okay, you want to follow the story. So pre-market there, you know, 10 a.m. peaks up to over 280, and then it goes down to 277, then up again to 280, losing a bit of steam, then down to up just above 277, and then it's looking like it's losing it a bit, you know, because after 11 a.m. it starts struggling there. It starts making a kind of settling at the bottom there, and then dipping, and then suddenly it just reverses again and goes up on this arch all the way to before 2 p.m. and then it makes that big dip. So it's very unpredictable, you know. But what I'm saying is before 1 p.m, okay, that movement from 11 a.m. to 1:30 p.m. is significant when you're thinking about taking a trade off 276 or 275, because it didn't break it at just after 11 a.m. when it had those few candles down, and it started going up. So it's basically showing that it doesn't mind being up at 281, you know. And it's had that big drop, but that big drop between 2 p.m. and 3 p.m, you know, 1:30 p.m. to 3 p.m, it could have been a news thing. It could have been something that was going on in the main news, but I doubt it. I don't think it, you know, I think that is just natural price movement. But obviously 275, you know, really and truly, if that had actually dipped to 275, and what you can do, okay, so the stock I was on, so I'm going to make an example here. So 3 p.m, okay, it's dipped down there, and say you saw that candle which had dipped almost to 275. So say you seeing it down there, and it was you thought it was coming near to 275 because it was at 275.50 or 275.60, you know, and then you say, okay, that is a support area on the SPY, so maybe that's going to be a point where I might get a reversal, okay. So then you look at that stock we were looking at. So I think it was MRA, wasn't it? I mean, this is going to get better. I'm going to do better video. I'm going to do a few videos on this charting stuff, because this is it. This is the guitar. This is the strumming. Okay, this is the skill of the guitar. This is the, you know. Okay, so I'll do them later. I'll do a video later tonight. So I'll upload this in a bit after I've finished it, and then I'm going to work. And then after I finish work this evening, I'll do a really cool chart video and really get you into it, so that you can actually make a start after that video. That's going to be my mission. So look, the 3 p.m. stuff there. So look, let's have a look at MRO. Let's have a look at that point where it was in that chart, and see if there was a, you see where it reversed just above 380. It wouldn't have been 380, it would have been about 384, 383, 384 there. But yeah, oh yeah. Look, it effectively did what the main markets did, didn't it? But it was moving in its own fashion, you know. And look how much it gapped up in the morning at April the 9th, and then, you know, reaches up to 440, and then it's on this trajectory going up. Really nice, you know. 380. It's a real dip down, you know. And if you look at, so you'd be looking at the main markets, you look at that movement on the main markets, which wasn't a cliff. It wasn't a cliff. It was moving down the same way this was moving down. But not only do you look at this chart and you look at the 3-minute chart, but you've also got to remember, every single time, you've got to have all the charts. You've got to have the daily chart. Another thing I'm going to show you in a second. Okay, I'll show you the daily chart first. So let's look at the daily chart, see where it is on the daily chart. So this is interesting, because we've got... Okay, I'm going to draw lines on here. It's a breakout, basically. It's broken out. And that's why we've got this momentum up, because it's so low anyway. And obviously all the markets are low anyway. But let me draw lines on here. You're trying to find the momentum. Look how low that is, you know. And it dipped down, it hit 3. Look, it bounced off $3. Exactly. You know. And if you look all the way up the chart, there'll be trading going on in levels on, you know, every single day of this chart, you know. But look where it hits down at $3 there, and then it's broken up above 4. Oh, this is a nightmare. So slow. And this is what breakouts look like. When you see a trend, it's like wedging, isn't it? This is what breakouts look like. This is what reversals in momentum look like. Over and over again, you know. It's momentum, remember, but diagonal lines and horizontal lines, draw them on the chart in the most obvious points, you know. So basically, the best place to get in on an entry is the most obvious place. The most obvious place for a reversal, rationally obvious by looking, or most, is the most obvious. So that makes it easy, Oh, it's so annoying. It's so frustrating. It's just so slow. Okay, there. So you see that when it gets to around 350 area, it's broken that downtrend. What is it? 350. Look, let's have a look, go down a little bit. 350 is a round number. Look at the hits off 350. So look in the middle of March there, and just before April, the end of the day of last red candle at the end of March there, hit 350, and then, but it goes up. So we're really low on this chart. It's starting to seem like, you look at the news as well, but I'm not going to look at the news. Well, I've told you about how you factor news in. You look at days. I bet there's positive stuff going on in the past 3 days or something. Because obviously, the company is trying to manipulate the stock in a sense because they want to release news at certain times. They want to somebody, I don't know. Anyway. That dipped down. It basically broke $4. That was a biggie, it breaking $4. So I'm going to look where $4 is on that chart. So obviously, look, we're looking at the daily chart here, but also I'm going to show you the 3-minute chart and why it was a good entry on the 3-minute chart as well. Well, April the 3rd, we got a downgrade here. So it was downgraded on April the 3rd, which is basically, as it started to go up. But obviously, that downgrade on April the 3rd, that's bad news, a downgrade, but it's oil and gas. It's an oil and gas, and crude oil at the moment is rebounding, and it has been rebounding for about a week or 2 weeks, maybe 2 or 3 weeks. I think crude oil's been going up. So even the oil stocks have been going down. They're so far down. I mean, if you look at this now and look at where it was in 2020 January, look, $14. It's basically gone down. How much percent? It's not normal. It's very much not normal. This stuff is ridiculous. So, let's have a look at the news. April 10th. Marathon Oil proxy shows CEO Tillman received total pay increase for the 3rd straight year, so that's not good either. Houston oil and gas companies are running out of places to cut costs. Look, Houston, they're cowboys, mate. Look, he's giving himself a nice paycheck. Cowboy man. April 9th, any stock turned down. Crude oil swings from big gain to big loss. All right, April 9th saying big gain to big loss, but Wall Street rises, Fed's 2.3 trillion rescue. So this is weird actually, because this stock is not. It's all bad news basically. Well, April 9th, Wall Street rises on 2.3 trillion Tread backstop. So there we go. That's something. That's obviously something to do with this. It's news that's been factored into this company for whatever reason, and that was April the 9th. So that was a trigger point there, and that was the 2.3 trillion Fed thing that was supposed to stimulate, the economy. Wall Street set to jump it open, you see, on Fed stimulus there. So that was April the 9th, we had that Fed stimulus going on. So let's have a look. So April the 9th. So, okay, we'll go back to 15th quick. So that was the news factored in, okay? Obviously, it was all bad there, but on April the 9th, it was that news that was affecting everything. And look how low this stock is anyway. It had all those downgrades and bad news, but it had dropped from $14 to $3, yeah? So, usually news is makes a bit more sense, Usually it's good news when stocks starting to go up, but this is obviously a crazy time in the market. And, it's always different when you're playing the markets, and all you have to do is just pay attention. But you need to know what's going on. You need to be aware of everything that's going on. That's going to affect the stock that you're getting, and it's going to affect your trading in the day. So April the 9th, that was when that Fed news came out, the stimulate. But yeah, so that's interesting, okay? Because look, this is similar to the main markets. The main markets have been moving like this from April the 3rd. There, the main markets have been looking similar. The SPY has been looking similar. So. But it's just more symmetrical, isn't it? When it comes down near 380 there, it's very similar. I think you could have taken that off 380. And we looked on the SPY, didn't we? And the SPY was approaching that support level. It was near it and it didn't hit it. And with this stock didn't hit it, but it nearly hit it, There's probably other stocks you can look at which did actually hit a very strong level of support and bounced off at this exact time. because the main markets were reversing, and that particular stock was reversing at this time as well. So people say, you know, trading at different times of the day, this, that, the other, but you can see that anything can happen at any time of the day, you know. So what I want to show you with this 3-minute chart is, look, we've even got a little pattern, tiny little mini pattern going on within that half an hour frame. And you know, if you'd have been happened to see it at maybe 2:50 p.m. just before that, you know, coming down to there, it's got a little. Let me do a 1-minute chart. I don't really look at 1-minute charts very often. I will actually sometimes if it's you know, if I can see that there's trends developing within a 1-minute chart, you know. I mean, look at the way it's moving. It's bobbing up and down all day, you know. It's up, down, up, down, up, down. It's making those bigger moves, but it's always bouncing up and down, you know. And I think yeah. So look, so so if you actually drew a line on the chart, oh god. I'm actually roasting in my car here because I've got the windows up because I don't want people to hear me talking when I'm on my own. That's not the right tool I got there, but all I want to do is just show you the kind of mini trend that was going on that could have allowed you to pick it up above 380 there. So you can see that everything's matched up to take a trade there at 382, 383, you know. It's hard to, you know, it's hard because a lot of the time you don't want to buy it higher than a certain level, and 380 is a strong level. When it's down there, you see it's just creating that little trend there. So you're looking at the story between between 2 p.m. and 3 p.m. From 4:20 just after 2 p.m, big drop, and then a little bounce up, and then $4. Look, it goes down below $4, then won't hold $4, and then it just, you know, bounces down, and then, you know, just where that arrow's crossed, the second dip down, it goes up above 390. Oh, few little trades up above 390, and then down again, and then where the bottom of that arrow, the last dip is at the bottom there, that's where it reverses and never goes back below there. And that is a strong level of support on this chart, and it correlates with the SPY's reversal, but not exactly, but almost. So you might have missed this trade from the fact that you might have wanted to get in at 382, 381, and maybe it was at 383, 384, you know. So that's another. But a lot of the time they will bounce off the exact level. Doesn't mean you can put a stop loss at 379, you know. But it means that you've got to give yourself a few cents leeway, and sometimes, you know, if you think there's a huge strong reversal, it's right down low, and you're basically buying at the very bottom. You know exactly where you're going to put your stop loss, but you buy it a couple of cents up because you don't want to miss it. So, for example, if you'd really been keen on this stock, and I wouldn't have necessarily really been keen on looking at that, but I would have been pretty keen on it, just looking at the price action earlier, because nothing's happened. It's been up there, you know, till 1:30, and it's been holding up at those high levels, and it suddenly drops down there. It did what the main markets did, but, you know, I did show you those results. This isn't the best one, so what I'll do, I'll finish this one for now. I hope you've got something out of that, because I have basically gone through a position there, but I want to find some more exciting ones. So maybe what I'll do is I'll look back at the I'll do a good video later. I'll look through for some, and I'll find some really good ones. I'll dip in and out and basically spend maybe 40 minutes doing exactly what I do when I actually trade during the day, and that is going to be the finale. Really, that's gonna be everything you're going to need to strum that guitar, a proverbial guitar. So I'll do that later, and until then, I'll see you later.